All right. Welcome back to another episode of Stock Shots. So we are going to take a look at, of course, the SPX, aka the S&P 500. But before we do, please remember, do not buy, sell, trade, or invest your life savings in anything that you don't know anything about. So do your own due diligence. If you hear us here or you heard about it on the internet, please do your own research. Okay. Remember, I'm just taking my opinion and look at the past to see if I can predict the future. All right. Now, with all that being said, this is my shot at a stock. If you want yours, hey, put it in the chat, email us, let us know. We'll do a little breakdown on that as well. But we are back with our weekly breakdown of the SPX 500, and let's get started. We were waiting for entries into a put position, meaning we're looking for entries to the downside. We were pretty much looking for this rejection of the grizzly line, aka this trend line. We're in a bear market, everybody. It has not changed. We just had a rally from here to here. All right, so if you're still waiting for the December rally, that being that it is December 12th at this moment, you may get a pop back up from this area right here. Let's just say it gives us a really good pop up. Let's say it gets to this level right here, maybe for, what is that, 41.20 area. Say we get there. That's fine. I will still look for a position to short the market at that point. My first take profit is going to be down here at about 37.10. Of course, we have our other ones marked. We did this in previous videos on our weekly support and resistance, and picking those out is pretty good. We went over that previously. So one thing we're going to do right now is we're going to talk about that Fibonacci retracement. We also had a video on that, and we explained how to use it. So I'm taking it from my most recent high to my most significant low. I'm going to drag it over. I'm going to see, did I hit any areas that I would actually need to be concerned about. So let's make this a little bit bigger. Get rid of this over here. All right. Now with everything that we put up here, this was my most recent high that I'm concerned of to start my Fibonacci retracement because I'm still going down. I just want to see how far I've this retraced. So it came to the 618. That means this line right here. That's pretty much what I'm concerned with. It did come up close to this area here. I'll use it as a level of strength at 41.26, but in all actuality, it's pretty close to here. So it got here, didn't like it. It also respects not just this level, but the area here, our grizzly line, that trend line. Now, with that being said, if this price action continues to go down, I would look for it to just fall completely through around the 0.5 to the 382 and pretty much land right here at the 38.35. That may be an entry for me as well, or maybe a quick scalp. We'll see how the market goes. The main thing is this is a time of year where a lot of the major money makers are closing their trades out. They want to get the money on the books to show that they made profit. It's the end of the year, so they got to show we can make money doing this so you can invest your money with us again. Now, that usually leads to a quick burst of investments later. But this week coming up, we have a lot of information. We have the Fed talking. We got I think this week we have CPI data coming out. Let's check real quick. Let's go for the dates. Let's go for that week. Coming up this week, we got some housing. We got some housing stats coming out on Tuesday. On Wednesday, we have the mortgage refinancing. Make sure I'm on the right thing here. Yeah. Okay, so we have some housing, we have mortgage notes. What else? Some more oil. And let's see here. This week coming. Okay, so I had a boo-boo there. All right, so this week we have some bills getting auctioned on Monday. Tuesday we have the CPI data. So CPI data is coming out on Tuesday, and it's going to be at 9:30. We're also going to have inflation, and then we're going to also have inflation rate. And that's all coming out at 9:30 on Tuesday. Oh boy, yeah. Tuesday's going to be a heavy day. And then I know on Wednesday we're also going to have, yeah, we got a big news day on Wednesday too. Wednesday we're going to have a lot of mortgage information. You're going to have some gasoline, oil information. You're going to have a bill auction, interest rate projections. That's going to be around 3 o'clock. So that's going to be a fun time. So I would suggest if you're going to be trading in the market this week, take your time. Make sure you do your own due diligence. If you're going to swing trade, be careful. You may get a pop to the negative. And if you're day trading, wait for the news to come out first and then jump in the market. See where it's going. Next thing is this. If you're looking to predict the market, you can try, but it's going to be hard because of the large fundamental influence that's going to be happening this week coming up. So take your time. Once the news come out, then react. That's going to be the best case scenario of you winning your trades. If you try to predict it, if you're going to try to play it both ways, it's possible, but you want to make sure you are first and foremost doing risk management, and second, did you do your due diligence? Have you been charting? Have you been researching? Do you know what CPI and PPI data are? Do you know how they affect the market? Are you sure? Are there more markets that you can play? Is there a certain stock? Is there a certain option? Is there a certain ETF that would help you make your gains this week? So that's what we got today for Stock Shots. We are still waiting, okay? You know why? Because we get paid to wait. My main job as an investor and a trader is to save money and make money. I'm not in the business of losing money. So I'm doing everything I can to make sure that the probability of me saving my money and making money is always going to be positive. So that's it for this week of Stock Shots. I am in a hovering pattern. I am just waiting. But we are going to put out another video this week on tools and some on supply and demand. So one of the tools we're going to use is something that can help you project what you might gain or lose. So say the market comes up to right here. Let's take this down to here. Now you have a permanent thing on your chart. It lets you know a percentage, and it lets you know how many bars. It can even tell you how many days that would take, and that is the date and price range. This is something you can use anytime on any chart if you're in TradingView to give you an idea of what you can gain, what you can lose. So it's a negative $340.98, aka 8.41% over 3 bars and 22 days. This is an easy tool that you can use. Once you're done with it, guess what you can do? Get rid of it. There you go. So we'll talk about that coming up in another video. All right. We'll see you next week for Stock Shots. And maybe next week will be your shot at a stock.